Okay. Um, Welcome traders, and it's another weekend of learning, learning the right things to everything that happens in this market. Okay, it's another weekend to learn and understand the fundamentals behind um, how this market is made up, how it's built. Okay. Um, I'm going to start today by um, requesting one thing from you, and that this request is very, very important. I presume, or should I assume, that as long as you are able to watch my videos down to this particular moment, it means that you know, you have considered yourself to be one of my students. And as your teacher, I would advise that you pay attention from here on. You pay attention from here on. The market itself is not complicated. It's not complicated, but because of the fact that we lack resources that are direct. Okay, in your school there are textbooks that when you buy these textbooks, they cover the inside these textbooks are topics that covers the entirety of the subject you are buying. Okay, so but the market does not have something like that. So it is through research, through diligence, working out, studying, using what's it called now? Studying materials, reading courses, learning, critical thinking, forming hypotheses, and trying as much as possible to understand this. It is through all these things that we get the knowledge that we use eventually to start making money from the market. So there is no school of knowledge that is very direct and precise, and we can say, oh, you want to learn forex, just go buy this book, and all you need to do is study it, and if you can come out of it successfully, you become a forex trader. We do not have that. So because of the lack of this, it complicates so many things for the trader. And this is the reason why, we, especially beginners and newbies, would go through the pains of paying for numerous courses, numerous classes, and at the end of the day might still not be able to, achieve something tangible from all the effort. So in essence, as a forex trader, putting in effort does not mean that you will get results, because you could be putting in effort in the wrong knowledge. Okay, you could be put and you see something that's wrong is wrong. If it's wrong, it's not gonna give you, yes, it's gonna give you the experience, but it's still not gonna give you the desired result. And that's why if you um if you have watched my video, if you have not watched my video to this point, then I advise you go back to MBM 001 and start watching. But if you have watched my videos to this point, if you have been active in class, if you have your notes, if you've jotted down things that I've been teaching, my plea with you is that you pay attention from now on. And the reason why I'm saying this is because from here on, our mode of communication would practically change. We will stop using, I believe that I have imbibed in you understanding of the basics. Now we are still in the area of basics, but everything, like I said, is chronologically arranged. We build from scratch, and from scratch we build ourselves up. We do not want to rush anything. At the same time, we do not want to remain at the same spot or fall back on our growth process. So please pay attention from here on. In fact, I have put it in my plans that I would be hosting spaces, Twitter spaces on my Twitter account, so that I can, explain or take some questions from you guys. It is my desire that at the end of the day, every single person who comes through my class do not remain the same. Because the market business model is a compendium of my research over years. It is a compendium of researches that I am still doing and researches that I will still do in the future. I'm a very far learned person as far as this market is concerned. I read a lot, I learn a lot. I subject myself to research a lot. I pay for courses. I study. I do a lot of things just to make sure that I get my hand on, first-hand information, classic information. In fact, I do not find what's it called now? I'm not cool with having someone just tell me, oh, this is the market, this is how it is. I want you to tell me why. And if I do not get my hand on the understanding of why, I would assume that I just don't believe on somebody's theory. That's what I'm saying. I want to understand the market to the point of ultimatum. I want everything I know about this market to be finite. I might not be able to have or know everything about this market, but I want to know how it moves. What are the underlying mechanisms? And these are the things that are covered in the market business model. They're all covered in the market business model. Your job here is to pay attention. If you don't know how to pay attention, if you don't know how to listen, if you don't know how to rewatch, if you don't know how to take down notes, you're going to misquote or misrepresent what I'm going to be teaching you. And by the time you misquote or misrepresent or even misunderstand them, you form a false theory on your head and you start pushing that out. The fundamentals I am teaching you are not the fundamentals you are used to. The fundamentals I'll be teaching you are not fundamentals like the ones you've had before. Basically, fundamentals had been presumed by many traders to be whatever is happening in the news, whatever is happening in the country, whatever is happening in the economy. Yes, that is part of it, but that still is not the reason behind. That's not our focus. Our focus is on the fundamentals behind market. We are still under the market section. When we started, we were speaking about government, banks, and the market. So this is the market. What makes the market to function? How does the market function? In the government sector, there are three arms of government. Here in Nigeria, we have three arms of government: the legislative, the executive, and the judiciary. And then when you start breaking these arms of government down, you begin to see that it's like a tree. It has branches. It has branches. And when you go deeper, you begin to see that it's even more complicated than you think it is. And that's the same way with this market. And I told you that, you see, under this market, we have different things. I've shown you business. I spoke about transactions. I spoke about price. And right now we're speaking about price. I think we're still under the area of price. Remember, I told you price would be our main focus. This price would be our main focus, and I think we are still on the whole of the price. But tonight's class is going to take a different turn because I'll be starting on a blank sheet with you guys. Yeah, because it's going to be something that would help us to have proper build up on price. You see, this word price is our bone of contention, and until we have full understanding of what it is, would be a slave to the market. So for us not to be a slave to the market, to be masters of the screen, it's very important that we know everything that makes for the creation of price. The moment we know how price is created, how price is transferred, how price moves, we put ourselves in a position of mastery. We do not become we do not become what's it called now, void of informations that are necessary for us to become masters of price. We do not we stop being scared of things. We understand basically everything that happens in the chart. It's possible that you know everything. You know, many people would say, oh, since you know so much, why are you not making so much? The truth is that you can know a lot, but the moment you try to use that lot that you know to make money, the moment you try to use that lot that you know in front of the screen, you just ruin yourself. That's why you're limited as a human. And you just have to accept that. It gets to a point where you do not accept that, but I don't think we're at that point yet. When we get to that point, we'll definitely cross that bridge. If you know so much and you don't know how to, guide yourself on these things that you know, you become a danger to yourself. You become a danger to yourself. So in order not to be a danger to yourself, dear traders, please, every single thing that you know, the thing about knowledge is that when you gather knowledge, it becomes a body of information. Then when you now need it for something, you pick it out, you pick part of that knowledge out and you put it into engaging that thing. What I'm trying to say is that, let's imagine this old box represents the old body of knowledge that you know. And then you need to understand why. Hold on, let me not use that. And then let's say, for example, you're trying to understand something like this. Covered in this body of knowledge, there are numerous things. Okay? And then this is another thing. Let me put another thing. Let's say, hold on. Let me put, let's say, let me put another thing. Let's say this one, another shape. Let me put another shape. Let's say, now on my screen are 4 different, objects. Now, covered in your body of knowledge are knowledge about all these 4 things. But let's imagine now that all you just need to know is this one. Why is this object in this shape? Not this one, not this one, not this one, this particular one. So what you do is you now go into your body of knowledge and you pick out the knowledge, the portion of knowledge where, that's, covers for the understanding of this thing, and then you pick it out and you use it. You do not need to go to start implementing and scattering your head. This is what you want to understand. So you dig into what you have and you use it to understand this. If this is what you want to understand, the same thing applies. So the fact that you know much does not mean that you should start bombarding this single thing with knowledge about, with knowledge about this one. You're gonna overwork yourself. It's just like I said, the market is a compendium of possibilities. Okay? There are possibilities. There are a lot of things we can do in this market. But the principles, the knowledge, the body of knowledge, the directions that makes for the understanding of certain things are finite. They are finite or finite. F-I-N-I-T-E. I hope that's the correct pronunciation for it. You want to understand this, the body of knowledge for it is limited. So the moment you have a purpose, let's say the purpose now is that you want to understand this object here. The moment this becomes your purpose, it makes it gives you direction, and this direction now makes for what would I call now, instructions that you need on how to get to understand this thing. Okay, so I had to go through explaining all these things first before I go into the chart. Before I go into explanation of things. We are not at the stage of going into the charts yet, because you don't even know half of what you're supposed to know yet. There are a lot of things you still need to know about this market, at least the fundamentals about this market. Remember, I'm not speaking about fundamental analysis or fundamental data. I'm teaching you fundamentals behind this market. Don't misunderstand it. I do not need this, so I'm just going to have to delete them. Now, let's start from here. In my quest for understanding how this market works, I found myself at a crossroad. And this crossroad showed me two things. Either be comfortable with what you know already and use it to make money because I was already profitable, or you dig deeper and you attain that mastery level of understanding. And I chose the second option. And that's what brought me to understanding liquidity, volume, and volatility properly, the in-depth understanding. We might not be able to exhaust these topics in one video. I hope we really do, or we really can. But like I said, I'm not in a hurry, and you shouldn't be too. This is a 6-month class, and there is a reason why I extended it for 6 months. So that by the end of the class, you are properly cooked. You do not go to the chart and you start guess working or guess trading. Okay, you know what's happening. You can tell with precision what without even having to have complicated instrument, complicated object and instrument on your chart. But then, how far are you willing to go? Are you willing to sacrifice that 6 months? You have to. Anyways, now, in my quest for understanding this market, I came across 3 things, which are liquidity, volume, and volatility. Now, in this video, okay, let me pick it this way. You see, this is why I said, please, for your own safety, make sure you pay attention and don't just watch only this video. Go back and watch those previous videos. They will help you understand this thing better. Now, what is liquidity? Okay, but before that, let me explain why these 3 things. Why did I pick out these 3 things? I want to teach them separately. And for every time you come to your chart, you see those candles that forms. If you use line patterns, whatever thing you use, it doesn't matter. But the thing is that whatever, those things are just graphs. Like I said, they are just graphical illustration of what is happening behind the screen. Now, the question is, what exactly is happening behind the screen? I said it in our previous video that I was going to explain to you. So if your candles are graphical representation of what happens behind the screen. So the question is, what is happening behind the screen? And this is where these 3 things comes into play. Now, there are 5 in numbers, but I'm not going to put the remaining 2 yet. I'm just going to teach you about these 3. And then once we build up our knowledge, we'll get to that stage whereby those remaining 2 would now be introduced to you. Just like before I introduce these 3 things, LVV, that's liquidity, volume, volatility. I spoke in my previous video that I wouldn't be revealing them until you get to that knowledge where it will be revealed. So let's build ourselves up little by little, step by step, preset over preset, no rushing. Okay. Now, you see those things that makes up for every candle you see are these 3 things. It does not go outside of these 3 things. It does not exceed these 3 things. It is not beyond them. It is not behind them. It is them. These 3 things explain to you the mechanism behind price delivery, price and price delivery. How is price created? Why would it deliver upward? Why would it deliver downward? What makes it not to even want to deliver? Why would it act in certain way? Why would it not act in certain way? Why does it act during some times like this? Why does it not act like this? These are the things you're gonna understand when you go deep into understanding these 3 things: liquidity, volume, and volatility. Everything you do in this market are based on these 3 things: liquidity, volume, and volatility. Okay, so everything that happens that makes for the formation of a candle or whatever you use as your chart representation, it doesn't matter anyway, because our focus is price. You get, because price does not change no matter what you use. But whatever it is that you use does not exceed these 3 things. Remember, we're still talking about price. We don't care about candles Our focus is on price. Now let's speak about liquidity. Let's pick that one out. Let's pick liquidity out and let's explain it. Now, you should know that markets can when we call something a profile, it means the entirety of the existence of that in the structural view. Okay, where we call something a profile, it is the outline of that thing. Okay, so you must be able to understand the outline of this market. So you see, liquidity, volume, volatility, and the remaining two which I'll be mentioning can be referred to the market profile. But then we'll get to, I don't want to call it market profile yet until I have released everything for you. So for now, let's just take each topic as a singularity on its own. And we're going to start from liquidity. So what is liquidity? Now, please write. Liquidity means and will always remain, regardless of whatever belief you have. Okay, liquidity would always remain as the easiness at which a currency pair can be converted to another a currency can be converted to another currency, not currency pair now. That's liquidity for you. Remember in my previous example, when I was using the example of basket, when I was explaining volume to you guys, I said, when people put fruit into a basket, when I was using that explanation in our previous video, I'm still going to bring that explanation here to explain liquidity for you. So liquidity means how easy it is in our for forex trading. Please pay attention. Liquidity means how easy it is for you to be able to convert one currency to another. So if you have Australian dollar and you want to convert it to the United States dollar, how easy would that be for you? Would you have to walk and stress? Would you have to wait and wait and wait and wait? Would you have to look for somebody at the end of the world before you can convert? That's not liquid enough. Liquidity means the easiness for conversion of one pair to another pair. It's as simple as that. If it takes a lot of time for your currency to be converted from one to another, well, it is not time-based now. It is actually resources-based. If it takes a lot of time, or if there are not much people who are willing to buy or sell to you, then that thing is not liquid enough. A very good example, let's imagine you have rice. You have rice that you have cooked. You own a restaurant and you made rice, you prepared rice. Now it's remaining for you to start selling rice to the public, but people are not buying. What's happening? It means your market is not, we remember, this is an analogy. Please don't be confused. Okay. Now you have cooked the rice and you now want to sell, but there are people are not coming. So it means that your market, your restaurant is not liquid enough. And for that liquidity to come, you need to do some things. Either you find a way for that rice to start getting sold out quick, and that is left for you. But let's imagine that you made the rice, you own a restaurant, you made food, and people come in within split seconds, your food is done. You're done cooking. That means your restaurant business is liquid enough. So in the forex market, we see liquidity as the easiness of how easy it is for you to convert one currency to another. The moment we understand that this is what liquidity is, it now helps us build knowledge for every other things that I'll be explaining further. Now, if this is true, then if liquidity is true, then it means that, remember that based on what I've explained to you, which I'm also going to be explaining further when we get to explaining, because explaining the fractals and the market, I want you to know that transactions are the smallest unit of price. Transactions are the smallest unit of price, and time frame is a collection of transactions. So when we get to that stage, I will talk about it, but for now, just have that at the back of your mind. Okay, now your transactions, or let me not call it your transactions, but let's go back to when I was explaining where is it called now, when I was explaining transactions the other time, AUD USD, back there. Now I explained to us that there must be someone who is selling and then someone is buying, and at the same time. So I was able to explain all those things. I'm not gonna go back, okay? But please pay attention. I don't want to rush you, but don't be confused, okay? Now, if you have AUD USD, I'm still going to use AUD for the example. AUD. Let's imagine you have AUD and you need USD. Now, what you have, let's assume that you have 20,000 AUD. That's what you have. 20,000 AUD. And you want USD. How easy is it for you to convert this AUD to USD? Remember, there must be someone who's willing to sell. So your object of transaction is AUD. Okay? And you need to sell it to USD. Can you convert your 20,000 AUD to USD? Is it possible? If yes, then we can assume that the United States dollar is very liquid. You get what I'm saying now? I'm not saying AUD USD, I'm saying the United States dollar is very liquid. What you have is AUD, 20,000 AUD. You want to convert it to USD? Yes. Can you easily convert it to USD without stress, without drama, without having to wait for years? If that's possible, then we can say that the United States dollar is very liquid. Let's imagine that this $20,000 now, this 20,000 AUD rather, you cannot convert all of them to USD at once. Then we can say that the USD is not liquid enough, or is currently not liquid enough. In the future, it might be able to accommodate, let's say you were able to convert just 10,000 AUD to USD. Now, and you cannot convert further, so you have to hold on. You will have to hold on until you have enough liquidity. Now, this liquidity now means that enough people, it could be wherever that is willing, okay, and it's up to the 10,000 AUD that you have left that you can convert to USD. I hope you get what I'm saying. Good. Now, every currency pair have the ability to be as liquid as possible. But the issue with one pair being more liquid than another pair is economical, is government based, is things I've explained to you before based on economic principles and inflow and outflow. You understand? It's just inflow and outflow. Let's just come down to that. Inflow and outflow. Remember, I'll say it again. Every currency pair in the world, every currency in the world, not every currency pair now, every currency in the world, AUD, USD, EUR, GBP, CHF, CAD, every single pair in the world have the ability to be as liquid as possible. They can take in as much liquidity as possible. There's no limitation. But the limitation to the liquidity, which is the easiness of conversion of one pair to another, is now dependent on inflow and outflow, which I've taught you. Now, still on liquidity, because we must understand this liquidity. I'm not in a hurry, so please pay attention. If you have AUD that's needed, now let's flip it. If you have USD, let's say 20,000, and you want to convert it to AUD, but you can convert it immediately, then AUD is liquid enough. So the same explanation that works for USD works for AUD, and works for AUD with other pair, USD with other pair, other pairs with AUD with other currency, USD with other currencies, AUD with other currencies with other currencies also. It works. It's that's liquidity for you. How easy it is for you to be able to convert your AUD to USD or USD to AUD. Now, some currency are more liquid than others based on inflow and outflow. But you see, the market we do not have the ability to see which is liquid, which is more liquid at the current moment. And liquidity is also time-based. Now, this is the thing about liquidity. Some currency are more liquid than other ones, and it is also let me not use the word time-based. It is inflow and outflow. So what determines liquidity now is inflow and outflow. I don't know why my hand keeps going to my microphone, but I hope it's okay. Okay. Inflow. Inflow. And I'm gonna call this one, and this one is outflow. Outflow. So the determinant for liquidity is the inflow and the outflow. Just hope this makes sense now. Now, liquidity, like I said, is not time-based. Okay, it's not time-based. Let me not use the word time-based. It is inflow and outflow based. Okay, when we get to the era or the section of time, we'll speak about it, but not now, because the belief of time in relation to liquidity is actually limited. Okay, so now, so liquidity is based on inflow and outflow and differs from currency to currency. Now, because of the differentials from currency to currency, okay, because of the differentials from currency to currency, liquidity at different times, yeah, it now affects how this liquidity are being used and presented. After all, it is what is available that you can use. If it's only 10,000 liquidity, if it's only 10,000 liquidity, let's assume that it's only 10,000 liquidity that's available in USD, and you want to convert 50,000 AUD, you cannot convert. It means USD is not liquid enough in relation to AUD. You get what I'm saying? So let's proceed now. In the scenario whereby there is not enough liquidity, let's say for example now AUD needs to be converted to USD, but there's not enough liquidity on USD for AUD conversion. What's it called now? The outflow from AUD into USD would be limited also. Now, this is where the flaws in the market, what's it called now? In the smart money idea, this is where there is flaw in the smart money idea. Because the smart money will tell you that, there are injections of liquidity, etc., etc. And at the end of the day, you realize that this liquidity there's nothing special there. Every single person who participates in this market are liquidity providers. When we get to understanding the real liquidity provider, we'll definitely, but for now, every single person, the true liquidity providers in this market are the participants, no matter what you call yourself. Be you retailer, be you smart money, be you dumb money. You are, as long as you have placed an order, market limit, you have brought in liquidity into this market. Now, so what is this liquidity and how do we represent them in this market? Now, liquidity represents as since I said liquidity is the easiness of conversion, then it means that AUD, since AUD is a currency, USD is also what? Another currency, abi? Good. Now, it means that if there are 20,000 people, orders, orders. If there are 20,000 orders to sell AUD, there must be 20,000 orders or above to match USD. So that by the time we want to sell that 20,000, when that 20,000 orders are being filled up, there is enough on USD to match them. Once this is not possible, then the USD is not liquid. Now, remember when I was teaching you, I said the market does not show us all these orders. We can't see them. We can't see all these orders. We don't have access to the order book. It's until you have access to the order book, you can say, oh, you can see them. And this is where, the last two, which I'll be mentioning, I think I will have to review one of them now, which is the market maker. They are the only one who have access to the order book and all. We don't have access to retailers, smart money. We don't have. I just believe that the word smart money is just personified. It is not it doesn't make you different from a retailer, because at the end of the day, we are all still playing the same game of prediction. So wherever you want to believe yourself to be, and that's why I love the market business model. It doesn't focus on who is doing what. It focuses on the fundamental, the real reason behind price. But if you don't understand all these things, I swear to you, you're not going to understand anything in this market. So there must be a matching order. If there are 20,000 AUD to be sold, there must be 20,000 or above USD to be sold and to be bought. So I want to sell AUD 20,000 to USD. There must be 20,000 or above. then we can say USD is liquid enough. The moment it is not as much as 20,000, then USD is not liquid. Now, if it's above 20,000, then it's good. So for every orders that comes into this market, we represent them as liquidity. So liquidities are orders. In fact, I don't need to type that. Now, the reason why I don't come with presentation to my chat is to my classes, because I want you to pay attention. Liquidity now, what is liquidity? They are orders, orders. In this market, that is what we see them as. Now, liquidity means other thing. It could mean, assets. In economic terms, it means assets. In financial terms, it means money. In, business terms, it means asset also. In different terms, there are words for it. But in the forex, foreign exchange currency aspect, we call it what? ORDERS, orders. Okay? So we have zoomed in, we are focusing on currency, foreign exchange currency. Okay? We call it orders, ORDERS. Now, there will only be, there are different types of orders in this market. There are 3 types anyway. The limit orders, the stop orders, and the market or active orders. But we'll be speaking about that when we get to bid and ask. Okay? We don't want to speak about them yet. All I just want to do now is help you understand liquidity. So liquidity are represented as orders in this market. They are orders. The moment orders comes into AUD, what do you think would happen? Inflow. That's our inflow. Remember, I told you when I was explaining that everything for price fundamental is inflow and outflow. Okay? It doesn't exceed these 2 things. You must understand them. Okay? So when there are orders coming into AUD, okay, we call it what? Inflow. Inflow. And when there are orders leaving AUD, we call it outflow. Orders can come into AUD in form of buy order, limit order, stop orders, which I will be explaining in order. So in when we get to bid, ask, and spread. But for now, let's just focus on understanding liquidity. Now, if there are 20,000 requests, 20,000 orders, 20,000 orders. Now, these orders, how can we know, which one is limit orders, which one is stop orders? We can't know that one too. See, when I tell you that this market, you as a trader, you are disadvantaged. You don't know. You don't see, if you are still trading based on what you are not even sure of. I'm very sorry for you. If there are 20,000 orders, we don't know. The only thing the only thing we can use to ascertain this is the order flow, which I would also be explaining when we get to the stage of understanding order flow. But it's also limited. It's limited. It's very, very limited. The only people who have access to see these orders are the market makers. And when we come to understanding, when we get to that stage of, oh God, I'm going to explain these market makers. They do a lot. Do not, let me explain to you guys. Do not trivialize the market makers. The word itself is self-descriptive. They make the market. If the market makers makes both the market where, if the market makers are the one who makes the market where the dumb money and the smart money are existing, then why should I follow the footprint or whatever of the smart money? That means the smart money people are still the same. They still predict like me. Yes, they have access to information. They have liquidity, wherever. That's none of my business. I don't care. They are still participants. My focus is not there. I want to be at the genesis of the happenings in the market. And that's what the market business model presents to you. We do not care about anybody's footprint. We want to be closer to those who makes this market. Now, if there are 20,000 orders, remember we can't know if it's limit stop or whatever, but there is 20,000 orders in this market. There must be 20,000 or above. $20,000 or above orders on USD. So let's say the orders on AUD is that there are 20,000 sell orders. In this example, let's use active orders, which means current market. So 20,000 conversion. Now, do we know if it's 20? Now, this is where volume now comes into explanation, which I'll explain volume. Because you see this 20,000, we can't know if it is one person who is making it or if it's a lot of people. This is where the idea of smart money is also flawed. Okay. We can't know if it is, you see this 20,000 people, we can't know if it is 20,000, this 20,000 orders, we can't know if it's 20,000 people who are selling 1,000, contracts or orders who are willing to sell. And we cannot know if it's just one singular person who is willing to do this. We don't know. But all we know is that this is what is present. This is the volume. Okay, these are the amount of orders coming in to sell. And then once this sell comes in as orders, there must be 20,000 orders and above of buy here. So these sellers place their bid. They bid. These sellers, they ask, and these buyers, they bid for it. And this is why order. You see how everything is now coming into play. So please, let me not use those grammars yet. When we get to that stage, you understand. So 20,000 people are now selling. 20,000 people now bought this. Now, once these 20,000 people who sold and these 20,000 people bought, then we can now say that USD is liquid enough. If the other thing, if it's a flipped case now, 20,000 people are willing to sell USD to AUD, then and it's possible, then we can say AUD is liquid enough. But if it's not possible, let's say you want to convert, there is conversion of orders of 20,000 people who are willing to sell AUD, but it's not possible for that to be matched, then we can say USD is not liquid enough. So for every buy, there must be a matching sell. And for every sell, that's why I keep on telling you guys, we don't know. How will you tell me that it's demand and supply that is moving price? It's wrong. Because these 20,000 orders now could come in form of they are interwoven. All these orders don't just come once. Inside these 20,000 orders, there will be, buy. Inside these 20,000 sell orders, there will still be some buys. That's why price don't move in a singular line. It moves in waves because those little buys that are inside this 20,000 sell, let's say out of these 20,000 orders, 19,000 are just selling, and then 1,000 is for buy. That 1,000, when you remove it, it causes what's it called? A pullback. Everything in this market can be explained. When we get there, we'll explain them anyway. So we are still on the subject of liquidity, because I need to help you understand liquidity in relation to outflow and inflow. Once you can understand how liquidity in relation to inflow and outflow works and how it now affects price, then we can now end for the day. All I've been doing since morning is just helping you understand what liquidity is. Now, can you know where liquidity is on the screen? No. This is where the idea of, oh, at every previous high there is liquidity. No, it's flawed. That idea is flawed. It's flawed. Yes, there are price reaction at those levels, but we cannot just assume it's because of it is liquidity. It's wrong. It's very wrong. We can't just assume it's liquidity. Liquidity is part of it, but it is not it. Now, to further buttress, to now help you understand liquidity properly, I would now use the idea of inflow and outflow. Now, and how it now drives price. Now, let's now look at how does this liquidity have been screaming since morning. How do they drive price? When there is 20,000 orders to buy, remember, a currency pair is a currency, could either be experiencing outflow or inflow, So based on what I've explained to you before, so let's now explain it properly. So there are 20,000 orders to buy. The reason why I'm using buy is because I've not explained bidding, asking, spread, and all those things to you guys. Okay. When we get to that stage, we'll cross it. If there are 20,000 orders to buy, then on the other side, hold on. Oh God. Good. Let me put it this way. Good. Now, if there are 20,000 sell orders, there must be 20,000 or above buy orders for us to consider it liquid. If there are not enough, maybe there are not 20,000 buy orders to match the sell orders, what happens? That's the question you're asking. What happens? And that is where, when we go to volume, we'll understand them. But in moment there are not enough to match these orders, we can just say it is not liquid enough. If there are 20,000 buy orders on AUD, there must be 20,000 or above sell. Now, remember, in this market, we deal with currency pair. So we'll be seeing AUD USD as a singular pair now. This is where inflow and outflow now comes into the equation. 20,000 people, 20,000 sell. What are they selling? AUD. Where are they selling it to? What are they using it to? So the moment they are selling AUD, what is that? Outflow. You get what I'm saying? If you are selling a currency, it definitely means you are letting the currency go. That is outflow. Money is leaving. Remember, money transfer or value flow, as you would call it. So money is leaving AUD as in form of what? Sell orders. Where is it going into? USD in form of what? Buy orders. Outflow to inflow. So the moment there is outflow on AUD, what will happen? Price will drop. And this outflow, the moment it gets to USD, what happens? Price, what happens to USD? USD price would increase. So AUD price drops, USD price increase. Because there is an outflow in AUD and USD. This is the idea of correlation. Remember, correlation is not used for analysis. I've spoken to you guys about it a lot of times. 20,000 sell orders matched by 20,000 buy orders on USD. Outflow here goes into here. Outflow, inflow. This is where the idea of demand and supply, because 20,000 sell orders means that there is a supply of AUD. So there is supplying of AUD, and then there is a demand of AUD here. Because the idea of supply and demand is singular. The idea of supply is on a product, not plural. That is why it is still flawed in this market understanding. You cannot supply and demand, use the supply and demand theories on varieties. Those are another thing entirely. Supply and demand is singular. So the reason why AUD would be selling, if you would bring the idea of supply and demand, is because there is a supply selling of AUD. Okay? And then USD, there is a demand on AUD. So AUD is being supplied. USD is now demanding for AUD. At the end of the day, it is still AUD that is the main function here, not USD. So it is not focusing on USD. That is why supply and demand is flawed. Because by the time you are now focusing on you are not focusing on AUD alone, what happens to supply of USD? And what happens to the demand on AUD? Because both of them are still existing as a product. So supply and demand is flawed in that area. This is where MBM is the ultimatum. 20,000 sell orders leaves AUD, gets matched by 20,000, leaves AUD as outflow, gets matched on the other side as inflow, because USD is now buying them. It's entering here. So they are matched. They are matched. Now, another thing you will now look is that if at the end of the day, once these sell orders are coming into USD, it means that USD is, let's say for example, AUD now is being sold, is being sold. 20,000 orders of AUD is being sold to USD. That means AUD is buying USD. Yeah, right? AUD is buying USD. Yes, you are selling to USD. So your AUD is going to USD. And as going to USD, you are getting, as your AUD is leaving, you are getting USD. You get what I'm saying? As your AUD is being 20,000 AUD is being sold, what are you getting in return? Because you cannot just sell and just go empty-handed. Something must be given to you. It is USD, right? Good. Now, it is USD, right? Good. Now, and as USD is buying those AUD from you, it must have something. So USD is actually buying AUD. And what is it giving out? AUD is, USD is the one that is being given out. So 20,000 AUD that is sold, what will be gotten in return is USD. And 20,000 USD that is bought, what will be gotten in return is AUD, right? Good. So that means these 20,000 sell orders that have been confirmed is now in USD. This 20,000 orders now is no more AUD, it is now in USD. At the finished product, as a finished transaction, yeah, we now have 20,000 USD on the that had been converted successfully. So those who took this sell here at the finished transaction now have 20,000. Sorry, not sell. Now have 20,000 USD. Okay, at a finished transaction, those who sold this 20,000 USD, 20,000 AUD, they now have 20,000 USD. Now, this is just explanation. When I use the word those, I am just using it as an analogy. We can't know if there. So let me just use orders. Let me keep on using orders. So these 20,000 orders that were successfully converted to USD are now in USD. And these 20,000 orders that were, bought with USD are now what? AUD. And now in AUD. And then what happened there? Price is balanced. Everything is now balanced until there is now conversion. Now, this is where the idea of the foreign exchange currency now comes into play. Because markets will never be balanced. So you see these 20,000 orders that are coming into this market. In the face of the traders, you would think, because AUD and USD is the pair, 20,000 orders are leaving AUD, all of them is going to USD. It's a lie. Not all of them are going to USD. You see these 20,000 orders, 10,000 of them might go into other currency pair like euro, other pairs, other currency rather, not other pair, other currency. Sometimes there is a need to match this order and there is no enough liquidity on USD. EUR comes into play. EUR comes into play. GBP comes into play. NZD comes into play. So these 20,000 sell orders you are seeing here, well, there will be inflow to USD. Maybe larger portion of it will go into USD. But some of them will not come. So at the end of the day, it is now wrong for us to now say, because there is 20,000 sell outflow on AUD, because of the pair that is connected to, or the pair that is quoted to AUD is USD, we'll now say it means that 20,000 of these AUD orders went into USD. It is wrong. What happened to AUD CHF, AUD CAD, AUD EUR, AUD, even AUD NGN? This is the forex market. Currencies can be converted to anything, to any other currencies. As you get what I'm saying now? So it's very wrong now to say. So you see these 20,000 sell orders, that is the only thing we see on AUD. We don't know where they are going to. So at the end of the day, this thing here is wrong. So we cannot now assume that because of there are 20,000 sell orders on AUD, then and USD is the paired currency, then everybody will now have 20,000 USD. It's wrong. And the same thing to now say, because there are 20,000 USD that buy orders, everything that was bought on USD were now AUD. It's also very wrong. Liquidity is dependent on currency, but it is not limited to currencies. So if there are 20,000 sell on AUD, that is all we know. Where did it go to? We don't know. The only thing we know is that there is an outflow. End of story. The markets don't tell us where they are. If the market had told us that, you see these 20,000 sell orders on AUD, 15,000 of them are going into EUR. What do you think will happen to AUD, EUR? Definitely EUR is going to go up while AUD will come down, and then USD will just remain there. It will not move. Another reason why correlation is in the mud, because this money is not leaving AUD to go into USD. Maybe some of them will come into USD, but majority of them is going into where? EUR. This is what transaction is. Orders being matched, being paired. So when you see AUD paired to USD and they tell you, oh, it means that AUD can be converted. That is the only thing they are telling you. It's only telling you that AUD can be converted to USD. It's not telling you that all the orders on AUD must be converted to USD, because there are pairs that are AUD CAD, AUD CHF, AUD, and those pairs are moving. So what is making them move if all the money is coming to USD? Because what we can say now is that 20,000 orders can leave AUD. Why? Because AUD is a singular pair in this case. AUD USD, AUD CHF. In fact, let me explain properly for you guys. Now, what is the common currency here? AUD. You can see AUD, AUD, AUD. And the remaining ones are different. Now, if there are 20,000 orders coming on AUD, that is all there is for AUD. Now, these 20,000 orders will now be splitted. Some will go, the majority of it might go to USD, but CHF will still be, GBP and EUR will still have their own. You get what? That's what I'm trying to explain to you here. So we cannot assume that because of there's 20,000 sell orders on AUD, and because the pair that is paired, the currency that is paired to AUD is USD, then there is 20,000. No, this is where the idea of liquidity is now a thing, and this is why in some sessions, some currencies don't move. When we get to that portion, we'll cross the bridge also. A lot of things I'm gonna teach you. Let's take it one after the other. This is why it doesn't move in some sessions. If there are 20,000 sell orders and USD is not liquid enough to pair this, to get this order, CHF is there, GBP, EUR is there. So how do we know when USD will be liquid enough, or when the pair you are trading is liquid enough? That is where the market business model comes in. We're going to trash all these things. We're going to trash them. How to identify liquidity on the screen. We're going to trash them. I hope this explanation has helped you understand the idea of liquidity. So when there is outflow, this is why sometimes when there is outflow on AUD, you see AUD, you will see that USD is not going up. Only AUD is selling. Why? Because the outflow is not fully going into USD. And let's talk about the other pair. Let's talk about inflow. The same works for inflow. If there are 20,000 buy orders on AUD, 20,000 people are willing to, buy AUD. Maybe from USD, understand? Because for you to buy something, you must be willing to have something. For you to sell something, so let's say there are 20,000 buy orders on AUD. That's the liquidity we are saying there. 20,000 liquidity are coming into the market in form of volume, but we'll speak about volume maybe tomorrow in our next class. 20,000 orders are coming into this market. That's liquidity for you. And there must be a matching sell orders, people who are willing to sell. Okay? So let's say, for example, now you need AUD. 20,000 people need AUD. There needs to be a buy for AUD. So there must be 20,000 people who are willing to sell their USD to get this AUD. It's as simple as that. then we can now assume this market is liquid enough. I hope this is well explained. I explained what liquidity is, how it is different from currency to currency. I explained what that liquidity are orders. Okay, there are orders that come into the market, stop limit and market orders. Then I also explained to us that there must be, for liquidity, you know, if there are 20,000 sell here, there should be 20,000 buy here, which or above, which makes it liquid and all. You understand? Now let me put this. Let's now not, because of this explanation was based on a pair. Let's not limit liquidity to a pair, because if you are limiting liquidity to a pair, you're wrong. So the best way to put it now is that if there are 20,000 sell orders on AUD, there must be 20,000 or above buy orders on other currency pair, not only USD. I hope you get now. And if there are 20,000 buy orders on AUD, there must be 20,000 and above. And this is why this market would always move, because you cannot tell me that USD, CHF, GBP, EUR, none of them will be liquid at any time. We'll have enough to match the other orders. And this is how it works. CHF with GBP, USD with AUD, EUR with all of them transacting together. Remember, transaction is the smallest unit of price. At the end of the day, everything still comes to a transaction, price. So when there is outflow, once there is inflow on AUD, which means people wants to buy AUD, then what happens? AUD goes up. Other pairs, it doesn't now necessarily mean that other currency will come down, because AUD is going up. That's why I'm telling you. It doesn't mean that other currency will go down. That's why I've been explaining to you this morning. Okay, and I've explained correlation, the idea behind correlation of the reason why those things happen. You understand? So go and rewatch it. So I think this is where I'm gonna stop for today. If you have any question, okay. Today is 19th of October. Okay, so which is on a Saturday. So hold on, let me check my calendar so I'll know how we're gonna fix our schedule. Now, on the 27th of October, I'll be hosting a space on Twitter. So you can follow me on Twitter, join the space, and I'm going to be taking any questions you have on things that I've taught so far. And if you have any question on liquidity also, you can send them in, okay? If you have any question on liquidity, you can ask them on that space, okay? So I think that's all about liquidity for now. Maybe tomorrow when we start, I might still touch on liquidity a little bit. In our next class, I'll touch about liquidity a little bit before I move on to volume. But then for now, these are basically covered 90% of everything you need to know about liquidity. So all you need to do now is watch and rewatch, write down, jot down, and understand what's happening in the market. Good night, guys, and God bless you all.